really fun.
Hey, before we get started, you have to check out and register for WAMP's 2015 Humanitarian and Leadership Awards. If you're a local here in Washington State, you gotta check this out. These guys put on a top-notch event, and it's a two-day event this year. Awards and black tie dinner on the first night, and real estate and lender summit on day two with industry leaders sharing and masterminding ideas. Now, if you're not in Washington and you work in a similar association, this is a great idea, and it's always well attended. The local industry basically gets all gussied up when we celebrate the year by handing out awards like Realtor of the Year and Loan Officer of the Year and even Title and Escrow Company of the Year. We've won twice for Media Company of the Year. Just saying. I believe this year they even added a new category called Rookie of the Year. And the best part is, well, besides the drinks and the good food, the best part is the awards are voted on by your peers. Great event every year. If you're in a different state, like I said, do the same thing because it's awesome and it's well attended. If you want more details, click on the link below. The biz is hard enough sometimes. Let's all just take a night off and celebrate our collective accomplishments. Now, if you blinked at the beginning of the month, you missed the subtle but big changes Fannie Mae announced. Finally, we are making our way back to make sense underwriting. I like the changes and I'm sure realtors and lenders alike will agree. Let's take a look. The big one, in my opinion, is the removal of reserves needed when converting your primary residence into a rental. Basically, when the market crashed, some folks were doing what we call in the biz of buying and bailing on their current home. To curb this, Fannie Mae said, hey, if you're gonna buy a new home and retain your current home and turn it into a rental, we're going to make sure that you have tons of reserves in your bank account. Now, you don't have to do that anymore. Quote, lenders should follow the standard rental income and financial reserve requirements when the borrower converts his or her current primary residence to an investment property. This is a big one as most homeowners and even realtors didn't know this, and it would catch quite a few people off guard when they would go to purchase. Big change, and it should be noted and shared. Other big changes: stocks, bonds, and mutual funds. Borrowers using verified stocks, bonds, and mutual funds to complete a transaction no longer need to document that the assets were liquidated when the lender documents the verified amount is at least 20% more than the amount needed in the transaction. In addition, borrowers can now get 100% of the value of these accounts towards reserves. It used to only be 70%, which means more assets can be factored into qualifying for your borrower. Borrowers used to get credit for a reduced amount of these funds. Now they get 100% and less paperwork when using them. And let's all be honest, we are all for less paperwork. Can I get an amen? Unreimbursed employee business expenses. We have simplified the guideline. Wait, what? Simplified the guideline? Those are words that have not been spoken in this industry for a long, long time. Sounds so good, let's say it again. We have simplified the guidelines to only require lenders to document and reduced qualifying income from unreimbursed employee business expenses for borrowers using commission income of 25% or more of monthly income. No documentation or deduction from monthly income is required for salary, bonus, overtime, or commission income of less than 25% of monthly income. Now, realtors just checked out because I used way too many lender words in one sentence. Lenders are like, really? Shoot, that may help me salvage a deal I just lost. Good, that's the point for both realtors and loan officers. Go back to those deals that didn't work out earlier this year due to one of these scenarios and help those folks get into a house, for God's sake. Now, there are a few other updates and we won't cover those because I've already bored you guys to death, but the direct link to the changes is below and you can check it out for yourself. Now, check this out. Some lenders will still have overlays that require this documentation. This is one of those times where it pays to have a direct relationship with Fannie Mae so you can sidestep the lender overlays. Don't know what that means? Ask your local lender and they'll explain the difference. Oh, there you are, Common Sense. We've been waiting for you. We've missed you in this industry. Welcome back.